Hi, everybody. Thank you so much for joining us. We're really excited because this is the first time we're actually partnering as Lean In NYC with another organization, Stage 2 Startups. Stage 2 Startups is an organization that supports the seasoned worker who's thinking about or who has already left their career path to found and grow their own businesses by providing workshops, training, and networking opportunities. So let me introduce our guests. Anthony Rodrigues is a compliance executive, chief risk officer at Usend, a U.S. fintech company serving more than 20 million customers. What does that mean? Let me just say it this way. He's got more than 20 years experience navigating financial crime issues with a pragmatic business-oriented mindset. So here are some of his certifications. One in public accounting, so CPA. He is also a certified anti-money laundering specialist, international privacy professional, cybersecurity oversight, and a certified cryptocurrency risk specialist. So I think you get the idea of why he's here. But actually, the reason we initially reached out to him is because he and his wife own a small business in New Jersey called Flor y Cafe, and it accepts cryptocurrency. So we wanted to get his perspective about crypto as a small business owner too. Greg Johnson, our other guest, for more than 2 decades, Greg's been a CEO and a senior executive at Fortune 500 companies like American Express and Ameriprise Financial, and also tons of startups in the financial services and insurance industries. He's a very sought after speaker. He's been featured at dozens of conferences in North America and Europe. He's got his MBA from Emory University Business School, and he's a frequent panelist and guest lecturer there. And he's also a serial mentor and advises multiple startups and was recently appointed to the prestigious Bretton Woods Committee in Washington, D.C., which, of course, I had to look up. I had absolutely no idea what it was, but it sounds really amazing. They champion global efforts to spur economic growth, alleviate poverty, and improve financial stability. Welcome to the two of our crypto experts.
Hey there, Deborah.
Hello, hello. Thank you, guys. Hi, Anthony.
Hi.
And everyone else who's joined us.
Excited to be here today.
Thanks. This is actually, can you turn your volume up just a little tiny bit, Anthony?
Sure.
Such a crazy, crazy time right now with all of this, right? We've seen crypto go, from nothing to a valuation for one Bitcoin of $69,000. Now it's back down around 20. It went up a little bit. Anyway, we'll get into that later. Let's just I'd like to, for the audience, just give a sense of how big this is right now. Okay, because there's a lot of naysayers out there. So as of 2020, 28% of American small businesses, we're not talking the major corporations here, American small businesses accept cryptocurrency as payment. As of May of 22, there were roughly 260,000 Bitcoin transactions per day in the US. And every day, there's over $1 million spent on goods and services with Bitcoin. And that figure comes from as recent as June 24th of this year. Wow. That sounds like a lot. All right. So let's, just in case there are some people here who have been living a little bit under a rock and haven't read that much about it, can I get Greg, let's start with you because you happen to be in the middle of my screen.
Okay, sure.
Would you just define Bitcoin for those who are real newbies here today?
Look, I'll do my best, Deborah, to do that. But we talk about Bitcoin and we talk about crypto. Is that on my end? I think there's some feedback. Is that on my end?
To me, you're sounding like you were glitching just a little bit.
Okay. Well, I think just to kind of reset with everybody, we have to go back into the time machine a little bit. And if we're going to do that, we have to go back to the previous financial crisis that many people remember so well. And we think about the Great Recession, the collapse of the global banking system. the technology that we now think of as being behind Bitcoin and many of the other cryptos, much of it had already existed. But when that collapse happened, 12, 13 years ago, it gave life to the movement in the technology community that birthed Bitcoin. And we go back to 2009, actually on Halloween, where a white paper was released into the scientific community that said, hey, we have an idea of how we could do a new cash money system, an exchange of value that didn't involve all of these central parties, these third parties that many people blame, the banks, the governments, that got things so messed up and almost collapsed the global financial services system. And so, first of all, we need to go back and say, when did this all begin? Well, parts of the technology had been around for many, many years, but it wasn't until this Satoshi fellow or lady or group of people, we still don't know who it was, no one's taken claim yet, came together and said, hey, we have an idea where we can string technology, it's become so advanced, and the global computer network is now big enough where we could actually have an exchange of value that doesn't involve governments or banks or any of the third parties that mucked everything up, during that crisis. So that's really the start of it. And then we can spend a lot of time talking about it, but Bitcoin is now another way to use technology to exchange value. Maybe a little bit later on in the conversation, I can give you my thoughts about that and why I think it's hard, especially for Americans, to wrap around this concept. But I'll throw it back to you.
Okay, let's throw it to Anthony and see what you might want to add in terms of how you would define what crypto or what, I guess we should say crypto, not that if I said Bitcoin, I meant to say crypto because Bitcoin is one of the cryptocurrencies. So if you don't mind, Anthony, how would you define cryptocurrency?
I mean, I think we just did a great job of giving some history about what crypto is. And I think it's just sort of, if you look at the natural evolution of money in our history. So we're sort of seeing history being made. And as we move into a more digital economy, as we have all seen since the start of the internet, we're entering a new phase of digital commerce. And cryptocurrencies help with that process and help to, from a technology perspective, help to prepare us for this, what's to come. When you talked about $1 million a day, when you really look at that in the big picture of the economy, we're just getting started. We're just really getting started. It sounds like a lot of money, but we're just getting started. And I think that's part of what this conversation is about. Why should small businesses or why should people start paying attention to that? So I think we're watching the natural evolution of money, and that's what Bitcoin and the cryptocurrencies basically represent, right? A transformation of our financial system into a digitalized economy that basically the internet was not built for. And then I think I'll leave it there and turn it back to you.
You'll leave it there for me to say, I'm sorry, what? What do you mean the internet was not built for this new digital economy?
Well, if you think about the internet, it was built for universities, right? Academics, research, sharing of just information, not information that's necessarily sensitive, such as our private information, as we've seen and we hear every day, right? There's hacks, there's, because there's vulnerabilities in the infrastructure that we have today. Blockchain, the underlying technology of the cryptocurrencies, even though they're hackable and a lot it has to do with, human error, it is an enhancement to that, right? It provides a way to provide a layer of security that the internet just wasn't built to have. And I think that's also the compelling part of the underlying technology of that it brings a layer of security where we can actually do secure transactions. And it's one of the benefits of cryptocurrency, as well as, being pseudo-anonymous and a lot of other factors within the technology.
Wow, guys, there's so much to unpack here. I think we need like 3 hours. So the way I look at it as an absolute layperson who's not someone in the financial world, in terms of professionally, what it sounds like to me is, in very basic terms, you've got banks. You walk into a bank, you give them cash, they hold it for you. They give you, in the old days, a toaster. And supposedly, they grew into giving you a little bit of interest as a gift for keeping your money with them, that they go and invest. And then that evolves into the idea of even a check. A check sounds antiquated right now. I haven't used a check in I don't know how many years, but
You're not alone.
right. The check brought about a new way of dealing with value transaction, credit cards, etc., ATM machines. All of these are kind of, I like the way you said it, Anthony, sort of well, you didn't say these words, but an iteration. We're repeating history, but just in a different level, in a different format, right? So what you're saying, if I'm getting it right, is this blockchain technology is what is underpinning the ability for these value transactions to happen safely and securely, and without involving the middleman, the bank, or somebody that's going to take a fee for providing a service of holding your money for you. I mean, that's about as basic, I think, as anyone on the planet could ever get. Does that sound right?
Sounds perfectly. Deborah, you have you are self-deprecating. You have a strong command of this as much as anybody that I've come across and talking to. When I think about what I would tell our viewers to also keep in mind is, we are so privileged. If you're tuning in from the United States, we have a very privileged lens in the U.S. We've been the dominant currency for almost 100 years now. Most other currencies are pegged to us, so we tend to look at things from a very privileged point of view. And what we like at Rubicon to do is to remind audiences that if you grew up in another country where maybe perhaps Venezuela or Argentina, Israel, Hungary, 20, 30 other nations that have experienced hyperinflation, they tend not to care as much whether or not how they exchange value or how they think about money being connected to their government. They don't get wrapped around that. As a matter of fact, they couldn't care less if it's backed up. They care about whether or not there's still value. One of the things that we as Americans have to come to terms with is that the evolution in the financial world that's taking place, it's in part from crypto and digital assets. It's a global movement. It's going to happen whether we want it to or not. And so I do think that's important to keep in mind. And the other thing that I would really try to emphasize this morning or this afternoon is for everybody to keep in mind, we're super, super early. When you were mentioning those figures, and I think Anthony said it before, this is a rounding error of a rounding error of a rounding of just how involved this is going to be over the next 10 to 15 years. So we're super early. It's much like the internet back in the late 90s, really early. And now you look back 22, 23 years ago, or from then, and everybody is dialed into the internet at this particular point. So we're at the early stages.
So why is there so much controversy over it, though? I mean, even if it is in its early stages, maybe, I don't know. Do you think it's because it's about something so important, your finances? This is my money. I have my money. I want my money, and you don't want it to vary in value. Is that why there's so much controversy over it, because of the big swings and the volatility?
Well, I'll let Anthony take it first, and then I'll chime in myself.
I mean, I think it's simply change, right? We all resist change, and if you want to really go deep, right? It's where crypto basically threatens the most oldest establishments of our system. Why? because when you own a crypto, it's owned by the people. It's truly sort of, not owned by a central bank, right? It's not an IOU. You have, this theory of, you have control. It's not censorable if you're holding it in what they call an unhosted wallet, right? And I think we'll go onto that. So I think
I hope so.
there's lots of reasons why it's controversial. I think some of the underlying libertarian values behind crypto can be considered controversial. We have the topic of the environment and what its impact to the environment, and no one could deny that that's potentially true. That's true and needs to be. So I think there's lots of different layers where there's potential controversy behind your point of view of how you're looking at it. That's why I think it's we are where we are, plus the volatility, right? Especially now, where people are losing money, right?
Right.
Yeah, if I may, I think I'd like to kind of tail off of a couple of those things. I couldn't agree more. What you're talking about with this evolution that Anthony mentioned before is disrupting one of the oldest industries in the world. I could make the argument it actually is the oldest profession, the banking profession. Okay, and that
Okay.
this
Some would
industry,
disagree. That's okay.
yeah, but I'm just saying. But this is an industry that has been at the core of human existence, and the reality is it's being disrupted like no other time. And there's controversy there. There's controversy because the regulation, technology always outpaces regulation. But the speed of technological change, evolution, we've heard that word before, is faster than it's ever been before. And the regulatory community, especially here in the United States, I might say, there's some hot topics about that in the news just this week, it's behind. So there's some controversy. And then I would argue that because the regulatory is behind, because there haven't been as many common sense options out there in the investment world, many of the early investors have gotten over their skis. In other words, they've invested maybe too much. They haven't been thinking about these new technologies with the right deliberation, the right moderation. And instead, they put too much of their portfolio into them with the wrong expectations. And with what we've seen since you pointed out, Deborah, in November, the all-time highs, we've seen an exponential fall off. And I think that's why things are so controversial. There are always charlatans out there looking to take advantage of people. And we're seeing that in the crypto and digital asset space as well. These are all of the reasons why there's controversy. And yeah, the environmental issue that has to do with how crypto is created in many cases, the amount of power that's used to administer, to govern, to validate these networks. These are all terms that are a part of this new ecosystem. That all raises people's interest and leads to more of the controversy, even though some of it may not be well thought out.
Gotcha. Okay, that's interesting. Just for a moment, take a step back and just talk about not getting too technical, but talk about the technology of Bitcoin or crypto in this way. Where do I get it? I can go into my wallet in my purse, which is sitting on the desk right here, and pull out dollars, right? Or some other foreign currency. Can you talk a little bit about, like, what is this? Where is it? How do I get it? And try to define some of the terms that you've just said, like wallet, etc.
Well, I think when we talked about, I'll take a first stab, I suppose, now, but I think for many people, they have to understand when we think about cryptocurrency, which is a horrible catch-all because there are so many parts of the digital asset universe that I think we get locked into the whole notion of crypto. But let's just break it down. We've heard of cryptography before. Many people have read the Da Vinci Code with the ciphers, and we know that in in government, there's, a lot of time and energy spent on sending messages safely and exchanging communications from parties, and we want to keep them secret. And so really when we talk about crypto, the cryptography part is using mathematical formulas to send information from one party to another in a way that's secret and safe and secure. In this case, what we're doing is we're talking about the exchange of value. When we talk about wallets, it's really, when you hear wallets in the crypto world, this is really a device that could be as a USB device in your hand. It could be a wallet that you have on a laptop, but we're still talking about digital now. And that is where you store all of the code, or the keys as they're referred, that correspond to what value you might have in this new ecosystem, this new crypto world. So whether it's Bitcoin or Ethereum or the Doge or Doggy coin, as some people like to say, it doesn't really matter. They all have to be stored someplace, and they're stored in what are known as wallets. And then there are different kinds of wallets. Some wallets are hot, which means you can access them via the internet, and so they're potentially vulnerable to the same vulnerabilities as your accounts at American Express or a bank. They can be hacked. That's where controversy comes in as well. And then there's something called cold storage, or a cold wallet. And that's not accessed to the internet. It's kept safe. You could even keep the device in a safe deposit box. You don't have to own your crypto in that fashion. But whether you do it yourself, or you transfer that custody or that wallet to a third party, someone has to hold that code, which represents that value. In fact, I'll just leave it with this. It's, in the olden days, we used to hear stories about people would discover hidden treasure in the backyard or in a house that they bought that somebody else put someplace and forgot it. We're seeing that, and it's interesting. We're seeing the modern technological equivalent of that, unfortunately, today. Because if you don't do a good job keeping track of your wallet, if you forget your code or your keys, you actually lose whatever value is inside of there. And we're seeing this emerge as a kind of a weird throwback to the way people used to hide stuff around the house, or bury it inside of a floorboard or something like that. And
or money under the mattress.
We're seeing that. In fact, there are high-profile cases, even in the UK, where this poor guy lost his keys. Literally, it would have been worth over $100 million. Seriously. So that's an extreme example. That gives you an idea. So I'll pause there. My apologies.
No, this is great. You explained it very clearly. Go ahead, Anthony. What were you going to say?
So I was just gonna, add to that, and I think, put it in the category sort of that I think of it, right? So I kind of think of the crypto financial system, just to, add to what Greg said. Sort of, you have crypto money. We talked about Bitcoin. We talked about Ethereum, right? This is the value store of the financial system. You have also one thing that's backed by our currency that we use on a day-to-day basis. They're called stable coins. So you have an example that's called USDC. So that's crypto money. That's the money that people are going to spend if they come to your retail store. Then Greg talked about wallets. So wallets, as he said, that's just where you hold your money, just like your regular wallet in your pocket. The difference is that there's variations of that wallet, and it's like Greg said, some that you own, right? It's in my pocket. I control it 100%. No one can take from it. And then I have kind of my bank account, or my wallet in my bank, where it can be censored. It can be taken away from me. So that would be kind of that hot wallet, right? The same vulnerabilities that you have at a bank account, and
with regular online banking, right?
With regular online banking, right? And then you have
okay.
the one that big difference is where you own it. Like Greg said, you lose your passcode, which is 12 to 24 words, right? It's like if you buried it somewhere and lost the directions to where you buried that treasure. So those are wallets. Then you talked about, your initial question was about, where do you get crypto, right? Where do you?
I was going to go back to that.
where do you get it? So I would say let's call these crypto banks, right? So these are centralized financial institutions. A name that, you know, if you watch the Super Bowl, everybody would know: Coinbase,
I was just going to say.
FTX, BitMEX, Binance, or some names that are global companies around the world that are just like B of A, Chase.
Just like storage houses for digital currency. Is that
That's
a
right.
simple
That's
way of
right.
saying it? Can I just show this for a second?
Sure.
This is a oh my God, a storage disk, an external storage disk.
Mhm.
Basically, if I understand you correctly, this, if I had my 12 to 24 word code, which signifies how much value I have in this currency, this is a cold wallet because it's external, but I have it here. Nobody else can take this. And the
That's
hot
right.
wallet is kind of like going and logging into Bank of America, for example, and putting in your username and password. Would
That's
that be a fair way of explaining the difference?
I think so. I think to a certain degree, we all have to come to terms with the fact that we're dealing with these are new technologies, and it does involve getting comfortable with new technology. Just like 23 years ago, most of us did not use the computer as we do today, and we've now become very comfortable and very adept at using technology in a way that we never thought we would at the turn of the century. And I think that's a really important distinction. Look, that all of these companies are emerging to provide new services and new ways to exchange value, to invest, to do many of the things that we're used to with traditional equity assets and so forth. And we're seeing many of those folks, and there's a very great deal of distinction between all of those different entities that are there if people are investing. One of the, Coinbase, Anthony brought it up. They've been unfortunately in the middle of a terrible storm right now. Certainly, they've been impacted like most other companies with the negative volatility in the crypto markets. But they were a high flyer, went public. They're off by about 80%, a little under 80% of their peak, if you can believe that. And because they're one of the largest exchanges in the world, they're also under the scrutiny, as was revealed earlier this week. The SEC is looking at them because of this controversy that has not been sorted out yet about, is a crypto a currency? Is it an asset? Is it a commodity? And that's one of the big questions that is going to be sorted out over the next couple of years and will have big implications for all of these institutions, certainly anybody that is participating in the crypto world right now. So just something to keep in mind. These are some of the behind the scenes and the headlines for folks if they're just getting into it.
Interesting. Anthony, do you want to add anything to that on that line?
We're watching the regulatory environment be created as we speak around the world, and I think that's a great thing, and the reason why it's important to understand crypto and why you should care, right? Because these are all signals of why crypto will become a mainstream type of asset. And I think in some cases it will be considered a money. In other cases, it'll be considered a security. In other cases, it'll be considered a stored value. And in some cases, it'll be a hybrid because, like Greg mentioned, this is a new technology, and every day the smartest people in the world are working on these things, trying to find, creating solutions for our future that creates a more secure financial system, and a financial system that is democratized, is the ideal, right? And I just kind of wanted to touch on one point that about the crypto financial system, the fourth kind of a component of the system that really is that we don't have in our traditional financial system today, and those are crypto protocols, or this whole concept of decentralized financial institutions. Some names like Uniswap might be something that people hear, or Compound or Maker. These are big software on the internet that is just programs. It's just a smart contract making all of these decisions. Absolutely no people being involved, right?
Wait,
So
hold it,
these
hold
are
it, hold it, hold it, hold it. You are talking above my pay grade now, my friend.
okay.
I've heard these words before. Some of them, not all of them. Take a step back, because again, the purpose of this talk is to sort of talk about what it is and why people should care. And right now, and I have to confess, my previous conversations with the two of you, you guys have absolutely made a believer of me that crypto is here to stay. And I would do well for the audience to say, none of us are investment. Well, that's actually not true in a way. You are, Greg.
No investment
We're not giving,
today, though, Deborah. No investment today.
Yes, today, this is not about investment advice.
No,
We are talking about the phenomena of cryptocurrency. But you guys absolutely have made me a believer, plus a lot of reading that I've been doing, that this is here to stay. And that's why people should care.
Let me interject if I may. And then we can go back into the terms, because I do think they're super important. You mentioned earlier there are a lot of naysayers. I think that's healthy, and I think an appropriate amount of skepticism whenever we're dealing with new technologies is always a good thing. What we try to do is to get people to see the hidden signs of where things are going, and let that help make your mind up about where you see this new industry. And what I would draw people's attention to for first and foremost are hidden signs that we look at. It's funny. One of those is the existing banking industry. Their behavior and what they say and what they do sound very, very different. So these same incumbents we talked about being disrupted. On the one hand, many of their corporate leaders publicly will say crypto and digital, it's all nonsense. And yet you will see the fact that they are making literally hundreds and millions, in some cases billion-dollar investments into building the technology to support digital and crypto at their banks, at their financial institutions. JP Morgan is one of the most successful financial services institutions. Their CEO has been the most vocal antagonist of the crypto and digital asset industry. And yet he's directed their treasury, their executives, to rather wisely, in my view, hoard talent, recruit from the top technical universities, actually buy out blockchain companies to stop their progress in some cases, a catch and kill approach.
Yeah.
We also see, for example, Fidelity Investments. I grew up in Massachusetts. I know we're in New York. Don't hold it against me. But the reality is Fidelity Investments is a massive institution. They're incredibly conservative, have that reputation, and well-earned for decades. And I will tell you, if we didn't see all of the interest rate news from this year, all of the market conditions that everyone is being impacted by, the biggest story in crypto and digital would have been the announcement by Fidelity that they were going to allow Bitcoin to be held in their 401k retirement programs. That is a major hidden sign. You don't need a Pokemon Go app to see where all the things are hiding. They're hiding in plain sight. They really are. And all kidding aside, you have to spend a tremendous amount in legal. You have to hire new people. You have to build the technology. This is Fidelity now. Just to put a little bit of money only in their 401k products. Wow. And you also have to listen to Elizabeth Warren squawking at you all the time about why it's a bad idea. So you're only going to do that if you have a long-term vision for where the puck is going, where we're headed as a society. And there are many examples. I'll leave you with one more. Walmart over the last year has put crypto ATMs all over their footprint. Why? They're using it as an in-house laboratory to determine how they might integrate payments at a large scale level as a merchant using crypto. And I know that'll bring us back around to the small business owner as well.
I was going to actually ask you about Walmart, but I'll let that go. Yeah, let's talk about a small business owner and the whole concept of getting into crypto and accepting it now. I think, Anthony, that is for you.
Sure, sure. So, at first, I think it's a little bit of a gimmick, right, to attract a crowd. So one of the things that we do at the store on Sundays, we do crypto and coffee, and, try to get people to come in, and whoever comes in talks to me about crypto, and I share what I'm learning, maybe questions I have, and go back and forth. So the first idea, when I saw it, was like, okay, well, I could drive. There's a market out there that are in the community about crypto. Also, the store is in a area that is you get the sales tax, and economically, I forget what the exact term is, urban economic district. So I'm a big believer about financial inclusion and financial education. So it's my way of also, kind of introducing this to the community as a talking point. And we use Shopify as our e-commerce platform, and they made it really easy to do, and also
to accept crypto.
To accept cryptocurrency, yes. And also Coinbase has a wallet that also makes it very easy to accept and send crypto. The truth of the matter is that we haven't done any transactions in cryptocurrency, right? So, like I said, but I do know that there's people that are interested in it, and I think there is going to get adoption slowly but surely. And I think when we want to think about some of the pragmatic reasons for accepting crypto, one, as an alternative payment method, you could think about processing costs, right? It costs us about business owners 3% to process your transaction, right? And with the company, the percentages in all of the type of different services that are in the crypto financial system are below what you'll find in traditional finance. So, processing costs, the fraud, for example, using it as a mechanism for fraud prevention. There's less likelihood for chargebacks because the transactions are irreversible. You could expand your market. For example, for those people, especially, these days, it's not just a retail local business. There's small business owners that are e-commerce, that are global, that can have the opportunity to, ship their product globally. And when, like Greg said earlier, sometimes it's hard to envision what it's like. Like, why do we need this crypto thing in the US? It's because, our financial system works very well. But like you said, if you were born in certain parts of this world and have to deal with hyperinflation, cryptocurrencies become much more attractive. And if you went to a city like Buenos Aires, you'd see a cryptocurrency ecosystem in retail transactions. Now, how, I think it'll take uptake in different countries, but it's coming, and you might as well get to know it. And it's not, in the end of the day, once you have your wallet set up, it's not that hard to actually send or receive a payment. It's just kind of, some of the companies make it very easy for you, and there's big names out there and big processors that you could integrate in. So why not be prepared for the future? And you never know what's going to happen.
That makes some sense. Yeah.
Yeah.
I have a question from the audience, and I think it relates a little bit to everything we're talking about, actually.
Sure.
And I do want to talk a bit about use cases and kind of where we're seeing it, and kind of relate it to, like, everything related to what's happening now. Everything that you're saying, the two of you, I'm thinking about where are we now, and how is it relating to that? Like, when you're talking about the fees and processing for your small business, right now you're paying 3 or 4%, for an Amex, the use of the Amex card, right? Maybe a little bit less, 2 point something for Visa and MasterCard. So that's the kind of stuff you're talking about, which again makes me think this isn't crazy wacko stuff. This is,
No,
I think of it as like an upgrade, or not upgrade, an update to a system that's already existing.
it's what it is at its core is it's competition. It's forcing these legacy ways that we've done business. I mean, small business owners should want this to win and work because it will force competition, rates will be lower, and it will drive down the competitive pricing that if you don't want to adopt crypto fully, it's going to force those rates to come back down. But I still think we're early, Deborah. I really do think we're early. And I think you have to know yourself as a small business owner. If your market is primarily to people that frequent your place of business, whether it's brick or mortar or virtual, and they are digitally native, you probably want to be thinking about, meaning people that were born into this digital world that we've had to all kind of clumsily get used to at a certain age, right?
Right.
If you're already working with a customer base that's leaned into technology, yes, I did do that.
Thank you for leaning in.
I'm sorry for leaning in. If they're already leaned in by default or by choice, you know your customer base. And so it would make more sense for you to be dialed in early to offering these payment solutions for your customer. And if you're dealing with folks that, are, median age is 1,000 years old, you maybe don't have to be an early adopter, but you should still be rooting for this transformation because with more competition, pricing will actually come down. And I think that's super important. From an investment standpoint, just to kind of pivot a little bit, from an investment standpoint, for people that are considering, did I make a bad decision investing in this stuff? Hard to answer broadly. But if you're contemplating investing, there are two questions that we encourage everybody to answer yes to before they even start to think about buying any type of crypto. The first one should be a rhetorical question with an answer yes. And that is, do you believe that in 5, 10, 15, 20 years from now, the world will be more technologically intertwined and dependent, human beings? And the answer should be, duh, yes. If not, it's rather arrogant to assume this is it. We have nothing else to innovate. There's no more smart people innovating. Come on, of course it will be. The second question is, did we learn anything from this pandemic that we've all had to live through, this bloody pandemic, right? And did we learn anything where we might answer the following question, which is, do we think that innovation, more and more of it will lean and skew towards the digital world? And if that answer is yes, now you can start thinking, okay, should I put a little bit, and the operative word in my view is only a little bit still, into this whole crypto world? And I believe that answer is yes. But you have to start there. But forgive me, I think you said there was a question from the audience that you wanted to tee up.
I did, but what you just said really speaks to what I wanted to draw out today, which was, again, this is here, this is happening, this will stay. And I even when I was sort of promoting this event, I said, we're not going to talk about all the hype. And so thank you for that, because I like both of you have a very sort of educated and measured outlook and perspective.
Well, on that note, if I may, can I just share one other thing just to kind of put this in perspective? Deborah, if I was your CFP, if I was your advisor in 1997, and I came to you and I said, hey, listen, we've been working together for a while. I've got something I think you should put a little bit of money into. I want you to invest in this company. It's named after a river in South America, and they're going to sell books. And you say to me, what's it called? I'm going to say Amazon. And you're going to say, where are they selling the books? I'm going to say, not at the mall, not at the store, not a mail subscription. They're going to do it on the computer. And you're going to say, I don't have a computer and I don't buy anything on it. You're crazy, but I like you, Greg, so I'm going to do it. How happy are you with me today? You're pretty happy, right?
Very happy.
Except for 13 years after you did that, from 97 until literally almost 2011, you hated me, or the one thing you used to bring up every single meeting was, how come you put me in that stupid Amazon? Why did you make me invest in Amazon? I could have done everything else perfectly, but that would have annoyed you to all end. And yet,
Yeah.
what we think about it is what happened the next 10 years. People
Right.
need to remember that Amazon went down or was essentially negative net to inflation. I'm not saying crypto is Amazon, but what took time for Amazon to pop was the network development, that they focused on growing the network capabilities for them to fulfill their business model. And what I'm saying is, for people, if they're going to invest in crypto, they need to have not a long-term perspective, but the longest-term perspective. So I think that's a foundational assumption that people need to have if they're going to be in this space as an investor.
Okay, good advice. Go
So-
ahead, Anthony.
Yeah, no, I love that as an example, and agree, and just when I think about it, at the bottom line is that investing in cryptocurrency is highly risky and speculative at this time. And if you want to learn about it, the best way is to actually use it, right, and understand it, and do some of the things that we spoke about today, as far as getting an account in exchange, and so you become more familiar, because we're all afraid of what we don't know, right? So
Yeah.
point is that whether or not you have money to invest, if you do, just invest the money that you plan to lose, and kind of move on with it. And it's because it is, at the end of the day, highly risky and speculative, and you need to look at it, like you have to really believe in the long term, and I agree with that. And my recommendation is, don't even look at it from, that's where the hype is, right? Look at it from, what are the use cases? Like, how can I go out and just learn a little bit about, okay, how do I
Right.
hold it? How do I spend it? How do I lend it? How do I borrow? Right?
Yeah.
These are all things that you can do practically with crypto. And each time you try to do one of these things, you're going to learn a little bit more, get more comfortable, and have a better perspective of how this could potentially fit into your small business, or your aspect of it. So that's what I encourage people to do, is that get away from the hype perspective. If you have some money to lose, go for it, and otherwise just use the crypto so you start understanding what these mechanisms are, and that doesn't cost a lot of money. It's
Right.
look at it as the cost of education.
Yeah, and that makes total sense. Just like one would do if they were investing in stocks by themselves, if they weren't using an advisor, right? You're going to look into companies and try to figure out where you think they're going. And if you believe they're going in the right direction, you invest in them, et cetera, et cetera. Okay. Let me go back to the question from the audience. There are two. One is, will our current monetary system become obsolete?
That
No.
assumes it's not obsolete already. I'll let Anthony go, and then I'll chime in.
It'll evolve. Our cash isn't going anywhere, right? It's still the best, most
Why?
anonymous instrument that we have. When and people like cash is taxes, right? And people, things that are negatives for Bitcoin and anonymity. Cash provides all that better than anything else. So I don't believe our traditional financial systems are going away. They're going to evolve, and this will become part of it.
Yeah.
For sure.
I have a thought where I see, in the not too distant future, a world in which there'll be a basket of choices for global consumers to exchange value. Some of it will be in cash, or what we call fiat currency, right? The money that is backed up by governments, right? And some of it will involve a number of different ways that we could exchange value. Some people forget that we're already exchanging value in a digital way every single day. And I don't want to go up on too much of a tangent here, but membership reward points, whether it's your Amex points or your frequent flyer miles, they actually behave very similarly. They have very similar properties, not exactly the same, not all as strong as the US dollar or other what so-called fiat currencies. but we actually do use those point systems as a way to transact. And as a matter of fact, in the world in which Amazon accepts them and other places accept them, they're used more frequently. That's actually a great example that we often use to help people that are really stuck on how can something be of value if it's not backed up by the government. You know, some people,
or something tangible.
That's right, or something tangible. And I'll say to them, you know, you have all your points. Did you ever use them? Yes, I have. Well, did you touch them? Where'd you keep them? Are they in your pocket? You know, are they in the gun safe? Are they in the, where are they? Are they in the Mercedes? Where'd you put your points? You never touched them, but they were of value. You used them. So these systems have been around for a while. And in fact, many practical use cases are evolving that are using crypto that have to do with how we think about the exchange of point systems in the future. I'm sorry, let me go back to that question, which was a really good question about obsolete monetary system. Some would argue that right now, the lack of competition has allowed the exchange of money. If you've ever tried to send money, my daughters happen to live overseas in the UK. And if you try and send value overseas, it's really expensive and it takes a long time.
Right.
And one of the things that we don't think about if we live here in the United States is just how many people live in different countries, work legally, hard, earn money, and send it back home. And they're still getting crushed with fees. The delays are incredible. And this might meet the definition of being obsolete. The SWIFT system, that is the underpinning of the global banking system, many people would argue is already old and archaic. The plumbing to that system is 50 years old. So I do think in many ways, it's going to force these legacy parties, the legacy banks, to innovate and become more competitive. They're not going to disappear, as Anthony rightfully, correctly pointed out, but they'll have to be leaner. They're going to have to be more competitive. And this innovation is going to force that. But it's radical, Deborah. We were talking about this is radical. They have not had to change for decades. Decades. And so this is a really radical notion that we're talking about. And look, I think the other question had to do with the exchange. How is it determined? The price? It's really
the
whatever.
Value. Yes, I was just about to ask that again.
Yeah.
We don't have a lot of time left, unfortunately, but keep going.
Real quickly, it's just what the market is willing to bear. That's really what determines the price. Whatever it starts at, you know, the sponsoring technology or the crypto may determine it, but it's whatever the market is willing to bear or pay is going to ultimately determine the price that people are paying on a day-to-day basis.
Scarcity, interest, perception, that's all what has to do with value, right?
We could spend a whole hour on the notion of scarcity. I will tell you that 70% of what goes into trying to value and trying to evaluate the worthiness of a particular crypto project is similar to how you think about evaluating an equity. The other 30%, boy, that's the magic. And we're spending a ton of time ourselves trying to evaluate that, because something that's called, in this industry, we refer to, you may hear it sometimes, as tokenomics. And so,
oh my God, wait, stop right there. The whole idea of tokens and NFTs and all of that. First of all, we had a conversation about NFTs last month. And we also had a conversation about blockchain, which if anyone wants to go to leaninnyc.com, you can see those past videos. But we've got a couple of other questions and only 6 minutes left. And these, I love this next question. Is crypto the financial version of nuclear physics? Go. Either one of you, go.
Cryptography for sure.
Yeah.
Well, okay, that's not how the question was posed, but go on.
The underlying security of it, what provides the security mechanism of it is definitely, super complex. I don't know how else to say, how else to relate to that question.
Okay. Greg?
Yeah, I mean, I'm not sure in terms of where the question is coming from what perspective. Certainly the complexity of the technologies at the code level probably would be just as daunting for anybody that's a layperson trying to understand anything about nuclear reactions, fission, fusion, et cetera, et cetera. I do think it has the potential, we're seeing it already, to force an industry that has not been forced to innovate in hundreds of years, really, truly innovate, to force it to change. So I do think it has that type of profound impact for sure. But, you know, listen, the notion of tokens, by the way, I know we were getting, you had mentioned that before. It's not that big of a deal. People hear about NFTs and they think about high art NFTs. Essentially, an NFT is basically like digital DNA. It's a one-of-a-kind piece that's transferred on a blockchain. Could be art, could be a property, it could be a deed, it could be an image from a war correspondent that's one of a kind, so it can't be altered or changed. It could be many, many different things. And as a matter of fact, I think that's just one example of many of the practical use cases that I think these technologies are leading to. So keep in mind.
So before somehow we got a little sidetracked. Before I wanted to talk about some of the practical use cases and bring it into some sort of reality terms. But there's another great question from the audience, and I really like to try to do audience questions.
Of course.
However, can we do this again? I know I've asked that to other people too, when we get into something and there's just so much to unpack.
Of course.
Can we do this again, like, you know, in a month's time or something?
Of course.
Because you guys, I love the way you explain things in such an easy to understand way. Okay, so another great question. If crypto replaces dollars as a global go-to, how does that disadvantage high pay, well-fed Americans on the global stage?
Well, I don't know that it replaces it, but I will tell you, you mentioned the Bretton Woods and some of the other work that I'm involved in. I can tell you that our primacy as Americans is being gradually eroded. We don't have the time to get into all of that, but every time we print money as a central bank with the Fed, all the times we printed money, people could argue that we've been weakening our currency, weakening our place. There's a long time away. We are still going to be the dominant currency that the world looks to on that side, but there will be additional options. And I think this is the reason why we want proactive regulation in the industry to maintain that American top spot. I am unapologetically American, and I believe in American exceptionalism. And for small business owners, I'm one of them, by the way, and I'm old. So I totally fit. You know, the sponsors of this particular, one of the co-sponsors of this particular group, I am at that point where I meet that demographic, and I'm entrepreneurial. And so we definitely are going to see this transformation, but it's not going to replace. I think people need to remember that, but it is going to force more competition.
I'll just add one thing. If you know, I think read Ray Dalio's material. He addresses a lot of this transformation of monetary policy and the U.S. currency. It's strengthening, weakening, depending on how you see it. It's kind of a little way above my head, but Ray Dalio provides excellent.
I don't think so.
Provides excellent information on it.
We only have a minute left, and I think I was a little bit remiss in my duties here, because you guys have such a wealth of knowledge in all of this. Anthony, I mentioned that you're currently working in your role for a company, USAND, fintech company, and that you have Flor y Cafe, which, by the way, is in Jersey City. And every Sunday, if you want to go and hang out with with Anthony and have a chat about cryptocurrency and all of that stuff, go in there, have a coffee, buy some flowers. What I didn't do is I didn't give an opportunity for Greg to talk about what he's currently doing. I think when I read your bio, I was sort of talking about the past. And I'm going to guess that there's a lot of people who are listening in now who probably would love to get a hold of you for some future advice. So would you just take less than a minute saying,
Look,
talking about your company?
Look, I'm a co-founder and I'm the CEO of Rubicon Crypto. And what we saw was an opportunity to connect the dots between the way that most people like to invest with another third party. They don't want to do this crypto on their own. They'd like to transfer that responsibility to partner with another firm. And we're one of the first companies in the United States that are doing active portfolio management. Much like you're doing with your other traditional assets, we do active professional management. We have 2 portfolios designed to kind of have access and allocation to different parts of the conversation we've discussed today. And we're one of the first people that are doing it and trying to make it very simple and very familiar to the way that Americans invest elsewhere.
Well said. And that's exactly why you're here today, because you do such a great job of that. And that is exactly what I'm trying to do with this whole series of leaning into the future of work, by explaining all these things we're hearing about, all these new technologies, et cetera, in a way that makes it really easy to understand. So hopefully you all feel like you've learned a lot. I want to thank both of you, Greg, Anthony. Great conversation, great questions from the audience. Thank you very much. And we're not going to do an interview or a workshop of any sort in August. We're going to take the month off, but we'll see you again in September. And we're bringing these guys back, right?
Absolutely.
Put a like emoji or a clap hand in the comments, because I know I want to bring them back, and I bet a lot of you do too. So thank you again. Thank you, audience, and we will see you soon. Have a great rest of your summer.
Thank you.